Why does it feel like so many stocks are red? So many of the stocks in our community are red, yet markets continue to go to all-time highs. What's happening? Why is this happening? And what can this teach us about investing? Well, that's what we're going to talk about in this video. Keep in mind, this video is brought to you by privateinternetaccess.com/meetkevin, but more on them in just a moment. There will be a link down below for them right next to that Cyber Monday coupon code for the programs on building your wealth, which is very good. Not quite as good as that Black Friday one, but still very, very good, and pricing will continue to go up. Take a look at that and get lifetime access linked down below. Okay, folks, here's the thing. Why, here, we got to break some of this down, and this is really good background info to consider. Ask yourself this. What do these companies have in common? Theta, Palantir, Square, Pinterest, Peloton, bunch of different SPACs, and Corsair. What do all those companies have in common? And then ask yourself this. What do these companies have in common? Enphase, Etsy, Adobe, Autodesk, Nvidia, Microsoft, Apple, and Qualcomm, and Google. What do those companies have in common with each other and that the other companies don't have in common with each other? Think about that for a moment. If you're a regular investor, you should already have a pretty good hint as to what the answer is. But just in case you don't know, I'll tell you in just a second. But first, we have to consider this. So far this year, the Dow Jones Industrial Average has 24 out of 30 of its companies in the positive territory. That's 80% of Dow companies are positive. In the S&P 500, we have only 90 companies with negative returns. That means 81% of companies in the S&P 500 are positive for 2021. In fact, we're expecting returns of around 25.8% for the year in the S&P 500 unless we get some kind of crazy December sell-off. That's incredible. In fact, I have a basket that I put together at metkevin.com/basket. It's a full basket, and it basically gives you an allocation in the S&P, the Dow, the Russell, and the NASDAQ. And that's actually underperforming the S&P 500 by about 1%. Pretty dang close. It's still up like 24%. Certainly beats what we've got going on at ARK. ARK K is down 14.25% for the year. ARK F, the fintech fund, is down 3.23%. ARK G, the genomics fund, is down 31.6% for the year. ARK X, the space fund, in case you don't know about it, you can type into YouTube, Meet Kevin ARK X, space, and you'll see a full breakdown of ARK X. That's down 3.99% for the year. ARK Q, that's the autonomous and robotics ETF. That one's actually up 8%. And overall, you've got a lot of institutions and hedge funds totally underperforming the S&P 500. So what's the big difference between those stocks that I just mentioned and, well, the two different baskets of stocks that I mentioned? What's the difference between them? And what can we learn about investing when we consider comparing these two? I'm going to answer that right after a message from our sponsor. Thank you to Private Internet Access for sponsoring today's video. VPNs are an important tool to protecting your privacy online. VPNs mask your identity on the internet so you can browse anonymously and avoid targeted ads. It means big companies and hackers won't know who you are or when you're browsing the web. So that's why you should check out Private Internet Access. Private Internet Access is one of the fastest growing VPNs in the world. It already has 30 million downloads worldwide and is only continuing to grow. It's super easy to use and only takes a couple of seconds to set up. Once you log in, you can simply select which country you want to appear in, click a button, and you're done. If you use the link in the description below, you could get 4 months totally for free and pay only $1.98 per month for the first 3 years thereafter. That's less than a Subway sandwich these days with inflation. So click on the link in the description or go to privateinternetaccess.com/meetkevin. Just a tip, some streaming platforms like Netflix have different shows available in different countries, so try toying with the country setting and see if you get different shows that you might be interested in watching. Well, folks, Theta, Palantir, Square, Pinterest, Peloton, SPACs, and companies like Corsair are not in the S&P 500. Companies like Enphase, Etsy, Adobe, Autodesk, Nvidia, Microsoft, Apple, Google, Qualcomm are in the S&P 500. Now, I don't want to sound overly basic here, but take a look at this, folks. This is a list of inflows and outflows into the top or out of the top ETFs of 2021. You can see over here, redemptions or outflows, you've got almost $10 billion coming out of the Spider Gold Trust. You've got money coming out of corporate bond funds, money coming out of, here we've got other corporate bond funds, treasury bond funds, the Russell 1000 growth fund, oil funds, consumer staples funds. These are all losing money. Now let's go over here. You got VOO with 48 billion in inflows so far. That is matching the S&P 500, by the way. The VOO just tracks the S&P 500, or tries to. VTI takes that S&P 500 and adds another like 3,500 companies to it. They have virtually the same return. There's about a 2% difference in their return, and that's because VTI has like 3,500 more companies, but it does encompass the S&P 500 companies. So $38 billion going into VTI is basically still like putting your money into the S&P 500. Then you've got the iShares S&P 500. Then you got bond and value. Then you got QQQ, which if you look at the top 10 holdings for the QQQ, they're almost freaking identical to, guess what? The S&P 500 holdings. Apple, Google, Microsoft, Adobe. You see where we're going with this? Then you got a short-term bond fund here, some other funds, developing markets fund, and again, the S&P 500. When we add up how many of these funds right here, or all of these net flows, which works out to about $206 billion. When we add all of that up and basically divide by the number that are going into S&P related stocks, you're seeing $66 out of every $100 going into these top funds are basically going into S&P 500 style stocks. So what is in the S&P 500? Well, it should be no frickin' surprise. Look at this, folks. Microsoft. With a 6% weight. Microsoft has been killing it. And I mean, like, I'm not a Microsoft bull by any means. I'm not a Microsoft bear either. Like, I'm totally neutral on Microsoft. But Microsoft's performance has been unbelievable this year. And it's the top stock in the S&P 500 with a 6.35% weighting, followed by Apple at 6.31, Amazon at 3.9, big gap, Tesla at 2.25, Google at 2.2-ish, Nvidia at 2, Facebook 2.03, then you got like JP Morgan, Home Depot, you know, Visa's in here, Netflix has absolutely been crushing it, they're in here. Now, not all companies in here have done excellently. I mean, look at like Visa and PayPal, right? We've had a little bit of a sell down in fintechs. But, folks, we got to make some conclusions here. So the first thing that I like to do when I look at something like this, and this was eye-opening to me when I was doing this sort of research here, is I like to think of myself as, where do I like investing? Well, I like investing in companies that I think have a lot of value. Well, I've always thought that look, and I want to be crystal clear here. I like Palantir. I think Palantir is highly misunderstood. I don't profess to be a Palantir expert. I think Palantir is a great company, so I think the same about Teladoc, but I don't invest in them. I also don't invest in companies like Corsair, even though I think, you know, they're going to grow a little bit slower. They've got good value. They're not selling for that expensive of a price. But why potentially do they not have something that the other companies do, which first and foremost is performance? Well, potentially it's because they don't have wind at their backs. Let me explain the concept of investing in something that has wind at your back using options as an example. So take a look at this. Jump on over here to the iPad, the good old iPad. All right. When you buy leaps, long equity option contracts, when you buy leaps, there are two things that hurt you. Number one is volatility crush. And the second thing that hurts you is theta decay. If you do not know what these two things are, you should not be investing in long call options because these things will bury you. Usually you just get people who buy calls and they're like, well, I think the stock's going to be worth more in the future. But you put no value on your vol crush or your theta decay, you're probably going to get screwed unless you're buying stuff deep in the money. And if you don't know what in the money is, you shouldn't even be worried about options at frickin' all. But anyway, these two things, let's understand what's happening in today's environment. Well, first things first, we have declining volatility. All you have to do is look at the VIX to fact check me on this. So you go to Webull or whatever it is, you type in VIX, then you go out to the day chart, then you zoom out. Honestly, you could probably zoom out even a little bit more. Go with the day chart. There we go. All right, go with the day chart. This is your 2020 crash kind of volatility. But what have you had since then, folks? Let's just draw the trend, okay? Very simple. Draw a little trend line here. What's the trend been? Has it been up or has it been down? That's obvious. Volatility has been declining. That is not a surprise. When volatility goes down, your options premium goes down. And every day that goes by as volatility goes down, your price of the value of your options goes down. And you get Theta Decay eaten away basically because you're paying to rent that contract basically every single day. So your value is going down. So in other words, when you're buying leaps in this market, you actually have what I call two headwinds. You have two things going against you, pushing against you. Now you could do the opposite of this, and then you would have two tailwinds. Two tailwinds would be, well, if you sell options. Because if you sell options, you win when volatility goes down. So vol down helps when you sell options. And Theta Decay goes to the owners of options who sold the options. So if you sell calls and sell puts, you have two tailwinds. If you're buying long calls, you have two headwinds. So what does that have to do with the S&P 500? And certainly is not Kimball Musk's documents right there. Well, what it is, very simple. The S&P 500 and people passively investing, PI, passively investing, are your biggest tailwinds. That's a good thing. That pushes you. So you have to ask yourself, would you rather invest in stocks that look really good on paper but don't have the tailwind of the S&P 500, or would you rather pick really good stocks out of the S&P 500 and have the tailwinds? And this is, by the way, just the kind of psychology that we talk about in the Stocks and Psychology of Money course. Remember, you could use that Cyber Monday code. It's a great deal, and the pricing does go up over time, so you may as well lock in lifetime access just in case you missed that prior sale on Black Friday. Black Friday was a little bit of a better sale, but hey, you've got another bite at the apple here, and the pricing will be going up after Cyber Monday. The Cyber Monday sales are over. But anyway, you've got some serious tailwinds when you're investing in S&P 500 related stocks. And I believe that's why companies like Shift Technology, Teladoc, Palantir, and some of the others are lagging behind. Now, don't get me wrong. It doesn't mean if you invest in every S&P 500 stock, it's going to do perfectly. I mean, I guess if you invest in the entire index, it's done great. It's been 81% positive. But look, Disney and PayPal have been getting smashed, and they're in the S&P 500, right? So it's not a guarantee. But I would say it's easier for PayPal or Disney to get out of this trap that they're in, this hole that they're in, because of all this money going into the S&P. So I actually think that's bullish. I also think it's bullish for companies like Enphase, Etsy, Adobe, Autodesk, Nvidia, Tesla, Microsoft, Apple, and so on and so forth. They're all in the S&P 500. Now, I do think that they're at extended valuations right now, but I do think there's an opportunity to buy these by selling puts. Just on a weekly basis, sell puts, sell puts, sell puts, sell puts. And if you get assigned, big deal. Then you finally own the stock. And if you don't, you're yield farming. Now, don't get me wrong. I do invest in companies that are outside of the S&P 500. Like I've got a huge position in Matterport or Affirm. These are excellent companies. Matterport killed it today. It was up 20%. This is another stock we've talked a lot about in the course. Stocks and Psychology of Money group. But anyway, consider this when you're investing. Look for stocks with wind at their back. You don't want headwinds. Headwinds hurt. Hopefully this perspective was very helpful and insightful to you. I wish you the best in investing. And folks, check out that partnership link down below or go to privateinternetaccess.com/meetkevin. Thanks so much. Goodbye.